Hello ladies and gentlemen, this is Usman Ali. The video I'm recording for the fourth type of depreciation numerical. We will discuss double declining method of depreciation expense calculation. Our cost of asset is $1,11,900 while the salvage value is $12,900 and the life is 5 years. Now let's go through the solution of the double declining method actually. So I hope you have watched the previous videos on the other methods of the depreciation calculation. So in double declining method, first we must calculate a percentage rate of depreciation that would occur per year or per period. It depends on you are calculating depreciation for how much time. If it's like annual basis, so the percentage will apply on annual basis. And if it's of monthly basis, so percentage going to apply on monthly basis. So that depends on your fiscal period or your accounting period. So the formula to calculate such a depreciation rate is that what you do actually is you divide 1 by the life of the asset. In our example, the life of the asset is 5 years, if you remember. So we will first divide 1 on the life of the asset, and then we will multiply it by 2. So multiplying it by 2, actually this is the reason we call it double. So and then whatever the result is, we can multiply it with 100. So in our example here, we had an asset, a machine, having a life estimated useful life of 5 years. So we divide 1 by 5 and then we multiply it with 2. So and then we multiply it with 100 to get the answer in percentage. So we get 40% per year, which means that whatever the remaining book value is, 40% of that remaining book value would be recorded as the depreciation according to the double declining method. So let's go through the numerical now. Year 0 represents the time of purchase, so it's the time when we have actually paid the money to purchase this machine. So for sure it's not used, so there is no depreciation as well. Then in the first year we are supposed to record 40% depreciation on the cost of the asset actually. So the cost of the asset is $1,17,900 while the depreciation rate is 40%. So I have shifted percentage into decimal form. So 40% is shifted or is converted into 0.40. So if we multiply this, we get a value of $47,160, which means that the depreciation for the current year, which is the end of the first year, is $47,160, and that makes sense because 40% of that. So $47,160 will also be our accumulated depreciation, because accumulated depreciation represents that's the total amount of depreciation that has occurred till today. So today is the first year, and whatever the current year depreciation is, same would be our accumulated depreciation as well. To find the remaining book value, we need to subtract this annual depreciation from the remaining book value, and once we subtract it, we get $70,740. That's the remaining book value at the end of year 1. Now when we calculate the depreciation for the second year, so then we would say that 40% of the remaining book value. So we are not going to multiply 40% with 1,17,900. We will only multiply it with 70,740 because that is the remaining value. So what's the point here? The point here is the depreciation percentage does not change. It remains constant. What is variable here is the value on which is multiplied. So once you multiply 40% with 70,740, we get $28,296. Our accumulated depreciation would be the total of the depreciation till the last year, that's the previous year, plus the current year depreciation. So we plus them and we get $75,456, while the remaining book value is $28,296 minus 70,740, we get $42,444. Let's go for the third year. So in the third year, this 42,444 will be multiplied with 40%, and we get a depreciation of $16,978. Our accumulated depreciation will be $92,434, assuming that you know the process of how to calculate the accumulated depreciation and remaining book value. So our remaining book value will be $25,466 this time. For the fourth year, we're going to multiply the remaining book value of the previous year, $25,466, with 40% of the depreciation rate, and we get a depreciation of $10,187. Our accumulated depreciation would be $1,02,620, while our remaining book value would be $15,280. Now, let's go for the last year. Now, our remaining book value is $15,280, which we will multiply with the 40% depreciation rate. If you multiply it, so this would be $6,112. Now look at here, ladies and gentlemen. What is my remaining book value? My remaining book value for the numerical, if you remember, was $12,900. It means that at the end of the life, which is 5 years in a numerical, the remaining book value should be $12,900 here. That is must. So we do have remaining book value in almost all the methods except the Macker's method, in which we do not consider remaining book value. Now look at this. If I subtract 6,112 from 15,220, so I will get a lesser value, in fact less than 12,900. Okay, let me do it. 15,280 minus 6,112. So actually I will get here 9,168, which is not possible because that's lesser than my salvage value. So if I subtract or if I utilize this 6,112, this gonna create a problem actually. I cannot do it. Let me take it like this, that I have a jug of water which is almost full, and I'm supposed to put some more water to make it 100% full. Okay, so what I do is that I pour some water in a glass, and then from the glass I'm trying to shift it to the jug, the water jug. So when I'm putting water, now let's say that the volume or the amount of water in a glass is more than in what is needed in the jug, and I'm putting water from the glass into the jug. So eventually the level has reached, the jug is 100% full now, and what if I continue putting more water, even the jug is full? So there won't be any benefit. The water will spill over, and the jug can only absorb or can only contain that much, which is the capacity. So we can only subtract that much depreciation, which is the capacity here. How much depreciation must be subtracted? So it's simple. 15,280 is what is the remaining value of the previous period, and I need 12,900. So if I subtract this 12,900 from 15,280, it means I just need to record 2,380 depreciation only. If, let's say, if I record this much depreciation, $2,380, okay, then my accumulated depreciation would exactly be $1,05,000, and my remaining book value will be 12,900, which is what I need actually. So it's like this, that I had that jug or a jar of a jug of water, which was almost full, and I was trying to pour some water, more water, to make it 100% full. So I was putting water, and the moment it has reached 100% capacity, that moment is the moment when I should stop pouring water into the jug, because if I put more, it will be useless. It will just spill over on the ground. Okay, so it's like I cannot record, or I cannot subtract too much depreciation. I can only record that much depreciation which is allowable, which is depreciable. So salvage value is not a depreciable thing. Okay, that's 12,900. That's the remainder we need. So this is how we do it actually in the double declining method. If the remaining book value at the end of the last year goes lesser than the salvage value, then this is the way how you treat it, the last year adjustment. So that's it, ladies and gentlemen. This was our double declining method. Thank you very much for your time. Stay safe.